and this podcast is for informational and educational purposes only and does not constitute financial advice. Please consult with a qualified financial professional for advice specific to your situation. The views and opinions expressed are those of the hosts and guests and do not necessarily reflect those of the podcast producers or sponsors. We make no representations or warranties regarding the accuracy or completeness of the content. Hi, my name is Bella Carrasco, and helping others feel confident about investing brings a huge smile to my face. After working in the private equity, family office, and securities markets for nearly a decade, I am breaking down the world of money, investing, and financial freedom. Work optionality isn't a dream. It's a decision you make today. I bring you actionable tips, expert interviews, and enlightening strategies to help you get richer and stay that way. This is the How Do You Know podcast. I don't work in tech, but I do have friends that are in it. And I have been approached by visionary founders who dangle equity compensation as a carrot. And visionaries are so good about creating a picture of taking this company to the moon. And many companies do that. They do make it, but it is sobering to realize how many don't make it. And unfortunately, like I said in the episode, you can't eat equity. So you still have bills to pay, you still have groceries that you need. Unfortunately, the equity compensation part of that won't help in those terms. Not to say you shouldn't have some sort of equity, but what is a non-negotiable, in my opinion, is to use tax strategy in conjunction with your CPA. Something that I think is also really important that Josh mentioned is reflect on where you are in your career, where you are in life, and where you want to go. Because between RSUs, ISOs, NSOs, it can be very difficult to navigate by yourself. And I've said it once, but I'll say it probably 5,000 more times. After-tax return is so important. The wealthiest families are focused on tax planning, and it's because that money that you pay in taxes is money that you will never see again. Whereas if you can keep more money in your pocket, you can then invest that and have that compound to achieve your wealth goals. If it does work out and you do IPO, you need to know what to do with this large sum of money that you have just fallen into. My friend is IPO'd in and out of several tech companies. He had advisors coming at him and felt extremely overwhelmed, didn't know how to preserve and grow his wealth. And that was a very stressful situation for him because he wanted to do right by him and his family. And he actually now has a platform where he helps teach tech employees to think through these things because nobody is going to care about your money as much as you do. And the advisors that were coming at him after the IPO, he didn't feel like they had his best interests in mind. Another item that Josh mentioned in the episode was real estate. And I think there is a huge misconception with real estate because many get into it for the depreciation benefits. They think that they'll be able to write off all of these expenses against their income. But if you're a W-2 employee, none of those losses with a rental property actually qualify you to be able to write it off against your W-2 income. If you have real estate professional status or if you have the time to do short-term rental loophole and things like that, then that's a different conversation. But if you are in a full-time role, it's really hard to qualify for real estate professional status. And dealing with a short-term rental is something that you really have to ask yourself if that's how you want to spend your time. Because for me, I own 2 rental properties. One has had so many issues this year. I've had 30,000 in losses. And again, that I can't use that to offset my W-2 income. I can use it against my other passive income, but right now that's not a strategy that's really relevant for me. So now I'm taking so many hours out of my free time to then have to solve issues with rodents, with dead trees in the backyard that have fallen, with potential mold issues, with front door issues. So you just have to really ask yourself, I am working X amount of hours per week. I'm working really hard. In my off time, do I really want to have to be dealing with these tenant toilet and trash issues? Ultimately, I think the episode made me realize that it's really important to know the difference between RSU, ISO, NSO, whether it's an option versus a grant versus stock. And definitely don't forget about after-tax returns. I hope this was helpful. Until next time. Adios.
Thank you for tuning in today. If you found any value and want to support the podcast, I would be forever grateful if you texted someone the link. You can say that you have a podcast episode that may be interesting for them. Also, if you have questions or topics you want covered, please don't hesitate to reach out on LinkedIn or Instagram. Remember that every step makes a difference. I hope that you continue to learn how to get richer and stay that way.